In March 2020, the market crashed 34% in 33 days. Millions of people sold everything in a panic. 6 months later, the market hit all-time highs. Those who sold locked in massive losses. Those who held on, they were fine. Those who bought more, they made a fortune. Here's the brutal truth. In every market crash, there are two groups of people. One group loses everything and never recovers. The other group gets rich. The only difference? What they do in the first 48 hours of panic. So when your portfolio drops 30% tomorrow, which group will you be in? Here's the concept that separates successful investors from everyone else. When your portfolio drops 30%, you're seeing what's called an unrealized loss. It's a paper loss. The value has dropped, yes, but you still own the same number of shares you had yesterday. Think of it like your house. If housing prices drop 20% in your neighborhood, did you actually lose money? Only if you sell your house during the downturn. If you stay put, wait for the market to recover, your house value comes back. The same principle applies to stocks. The only way to turn an unrealized loss into a realized loss is to sell. The moment you sell during a crash, you lock in that 30% drop forever. You've taken a temporary problem and made it permanent. Here's the stat that should terrify anyone thinking about selling during a crash. If you invested $10,000 in the S&P 500 from 1993 to 2023 and stayed fully invested the entire 30 years, you'd have about $160,000. But what if you missed just the 10 best days in those 30 years? Your $10,000 would only grow to about $76,000. You just cut your returns by more than half by missing 10 days out of 10,957 days. Now here's the kicker. Most of those best days happen right after the worst days. 7 of the 10 best days in the past 20 years occurred within 2 weeks of the 10 worst days. If you sell in a panic during a crash, you miss the recovery bounce that follows. This is why timing the market is nearly impossible. You're not just trying to avoid the crash, you're trying to get back in at exactly the right moment to catch the rebound. Almost nobody does this successfully. Let's look at real crashes and real recovery times, because history is the best teacher we have. The Great Depression crash of 1929 took 25 years to fully recover. But that's an extreme outlier, and it included a world war. Let's look at more modern crashes. The 1987 crash, also called Black Monday, saw the market drop 22% in a single day. Recovery time? About 2 years. By 1989, investors who stayed in were back to even, and those who kept buying during the crash were way ahead. The dot-com bubble burst in 2000, and the market fell 49% over 2.5 years. Recovery took about 7 years, with the market finally reaching new highs in 2007. But anyone who kept investing monthly during those years bought shares at massive discounts and came out ahead. The 2008 financial crisis was brutal. The market dropped 57% from peak to bottom. But if you held on and didn't sell, you were back to even by 2013. That's 5 years. And if you kept investing during the crash, buying shares at 30, 40, 50% discounts, you made a fortune in the recovery. The 2020 COVID crash dropped the market 34% in just 33 days. It was the fastest crash in history. Recovery time? 6 months. By August 2020, the market was back at all-time highs. Anyone who panic sold in March locked in huge losses. Anyone who stayed invested or bought more during the crash saw massive gains. So, what should you actually do during a crash? First, do nothing. Seriously, close your investment app. Stop checking your balance every hour. Remember that your loss is only on paper unless you sell. Second, if you have cash available and can afford it, this is actually the best time to invest more. Market crashes are sales. Everything you wanted to buy last month is now 30, 40, 50% off. Warren Buffett has a famous quote, "Be fearful when others are greedy, and greedy when others are fearful." Third, if you're doing automatic monthly investments, do not stop. This is when dollar cost averaging is most powerful. You're buying shares at discounted prices that will be worth much more when the market recovers. Fourth, zoom out. Look at a 100-year chart of the stock market. Every single crash, every single panic, every single "this time is different" moment looks like a tiny blip. The long-term trend is always up. And fifth, remember the math. Missing the 10 best days costs you half your returns. Staying invested through the pain is how wealth is actually built. So here's your action plan for the next crash. Treat unrealized losses as exactly what they are, temporary. Don't turn paper losses into real losses by selling. Keep investing if you can. And remember that every crash in history has been followed by a recovery and new all-time highs. Drop a comment. Have you lived through a market crash? Did you sell, hold, or buy more? What did you learn? Let's hear your stories. Thanks for watching and subscribe for more financial concepts.